We are finishing up section 4.1, so chapter 4, section 1, and we're on page 128 and 129. So if you want to look at page 129, you'll see this worksheet over here, and just go ahead and follow along with that as I kind of discuss what's going on. So we did all our adjustments. We adjusted our supplies, our prepaid rent, our equipment that had depreciation, and then our salaries payable. We did all of our adjustments. And now we want to finish our adjusted trial balance. Remember, this worksheet has 5 sections: the trial balance, adjustments, adjusted trial balance, income statement, balance sheet. So let's talk about the adjusted trial balance. You can see that the numbers are brought straight across from the trial balance to the adjusted trial balance. So when this happens, if there are 2 debits, they will be added together, and 2 credits will also be added together. If the numbers include a debit and a credit, we would take the difference between the 2 and place it on the side that is larger. Okay, so let's take a look at page 129. The worksheet here. I'm going to try to get a little closer. Okay, and this is again page 129, our worksheet. So you can see something like cash. This was our initial trial balance, and then there's no adjustment. So you just bring that same amount over and keep it on the same side. So if there's no adjustment, you don't change anything. Debit side, same number. Same thing here for accounts receivable. Now we get to our office supplies. If you remember from earlier, we had office supplies. We started with $600. We used up, adjusted for $500 worth, which means this was the debit side, this is a credit side. We take the difference between those 2 numbers and put the amount on the side that's larger. So $100 goes on the debit side for office supplies. And that makes sense. We started with this much, we used up some stuff throughout the month, and we're left with $100 worth. Okay, remember, just take the difference and place it on the side that's larger. Here we have prepaid rent. That's a similar situation. We started with $1,200 in our prepaid rent account. 1 month went by, so we expired or used up $400 worth of rent. So we take the difference and put it on the larger side, $800 on the debit side for that. Word processing equipment, there's no adjustment, so keep it the same. Payables, no adjustment, same thing there. Right, so if there's no adjustment, you just take the number and place it in the correct column. Now we're on to office salaries expense. Remember, we had our initial salary expense of $1,300, which, let's say that payday was on Friday, the May 27th, right? And then some people worked on Monday, Tuesday, Wednesday, which are still in May, but on the next month's paycheck, we still need to track the salaries we owe them in the month of May. So we add what we owe them, right? We adjust it, we increase those expenses, and so we take a debit plus a debit to get a new, larger debit. Remember, if they're in the same column, you're going to add them together. Debits go add to debits. If this was a credit, it would be the same. Add your credits. No adjustment, no adjustment. So we drop down here, office supplies. Remember, this adjustment was the expense increase from up here. So we just bring that over to our debit column. Our rent expense, the $400 that expired, gets pulled over. Our depreciation expense was $80, so we pull that over. And then we have the accumulated depreciation, which was a credit of $80, so we bring that over. And our salaries payable was a credit as well. Again, so there was no starting balance here, so we just carry them over to the side that they're already on. Now, your left and your right have to equal, just like everything else we've been doing. Your debits and credits need to equal. Same in adjustments and the adjusted trial balance. That all needs to be equal. Okay, let's move on to the income statement. So before the income statement, I want you to turn to page 130 and just take a look at this chart here. I'm going to pause the video. I just want you to look at these account titles, what category they fall under, the normal balance, or whichever side they increase on, and then where they go. It's been a while since we've done practice with this. Just take a minute or two to familiarize yourself with those. So hopefully you paused the video and took a minute or two just to familiarize yourself with that. So let's go on to the income statement. Okay, your income statement is shown on page 131. Up here, you see you have your account titles, you have the adjusted trial balance that we just finalized, and now we have the income statement portion. So as I talk to you about how that works, go ahead and take a look at that on page 131. So, remember an income statement, our normal financial statement for income statements, gets our expenses and our revenue, right? We remember that, expenses and revenue, because we're trying to find a net income or a net loss. So expenses and revenue is what goes on there. So just a note about a couple different accounts we've been talking about this chapter. Accumulated depreciation does not go on the income statement. Accumulated depreciation is a contra asset, the opposite of an asset, and it will be found on the balance sheet with the other assets. All right, and then the salaries payable is another one we just added recently. That's a liability. It would be similar to accounts payable. It's a liability. We owe it out yet, so not the income statement. So our revenue of $8,000 and all the individual expenses will be listed in that income statement, which you can see here. Okay, so income statement has our revenue and our individual expenses, and then these expenses as well. So think about the normal balance of types of accounts. Expenses have a normal balance of debit, and revenue has a normal balance of credit. So in the income statement section, expenses go on the left or debit side, and revenue goes on the credit side. If it's helpful, maybe come down to the bottom and write a little E and an R if you need to just remember which side is which. But just remember what the normal balance is. Expenses increase on the debit side, so we're going to put all of our expenses on this debit side. So we're going to total them, okay? Total your debits, total your credits for your income statement, which is just expenses and revenue. Here we have $3,100, and over here we have $8,000. So we're going to calculate the difference between the debit and credit columns, and then we're going to place the difference on the smaller side. So the difference here, right, remember this is our income, our revenue, minus our expenses. The difference is $4,900, and we're just putting that on the smaller side. So right now, do not think of net income as a debit or a credit. We're simply putting it on the smaller side. If these numbers were reversed and we had to put this number on this side because it was smaller, it would be a net loss. Okay? So don't think of net income as a debit or credit. We just put it on the smaller side. So right now our net income is $4,900. Then we total and balance out our income statement. And that's why we have to place our net income on the smaller side so that these numbers actually balance out. Okay. So we need these to be in balance. Net income goes on the debit side, or the smaller side, sorry, it goes on the smaller side. And lastly, we're going to look at the balance sheet. So the balance sheet is going to be the next section within this worksheet. It would be over here. In this case, if you can just flip to page 132, right, and then just take a look at our completed worksheet and see everything all put together over there. Remember, just what goes on a balance sheet. So the balance sheet is going to have assets, liabilities, and owner's equity. Okay. which is what we see here. Our assets, cash, receivables, supplies, word processing equipment, prepaid rent, that's all going to be over here. And we're just going to keep it on the same side again. And then we have our payables and capital and withdrawals, so we're going to keep those on the same side. Down here, accumulated depreciation is that contra asset account. It's the opposite of an asset, but it is going to go on the balance sheet. So the $80 here, and the payables, that's a liability, that goes over here. Okay? Now, you're going to see that these totals don't match, but we need to add our net income. So here we would total everything up and get $18,680. Over here we total up and get $13,780. On the balance sheet portion of this worksheet, we take our net income and place it on the credit side. Okay? Put it on the credit side, total them up, and they should be balanced or even or equal. Now, if net loss were to occur, so remember back here on the income statement part, right? If we had a net loss that we put over here, if we lost money, we would put it on the debit side of the balance sheet. But because it was net income, it's going to go over here. So it's the opposite of the income statement. That's where it is on the income statement, and that's where it is for the balance sheet. Okay, and then you did your worksheets in class, so you should be good from there. That's all for Chapter 4, Section 1.